Welcome to the Enterprising Conversation channel, your small business watchtower. I'm your channel host. I'm your enterprise development and training expert, Rendani. Now, today we are going to deal with how to calculate the cost of goods sold. Usually, when I get to training, especially when we're dealing with financial management, we're having a conversation on financial management. There's a question that I usually like to ask the owner managers. And I'm saying owner managers because most of the time, some of the people that we train are running owner managed businesses. So, for example, the owner manager will come to the training, and the question that I'll pose to them would be like, how will you know that the person that you left at home is giving you the amount of money that they're supposed to give you? You left somebody who's taking care of the shop, they are selling stuff, they are helping customers. How will you know? Now, I'm going to ask our resident entrepreneur here. How are you going to know? You came to the training here and you left somebody who's selling. How will you know that they're giving you the right amount of money? Let's start there. What do you think?
I think I would know by putting my target for the day. I must have a target for the day.
Target for the day. You use the target for the day. How will you use it to know? When somebody says, here is 500 rands, that's all that I sold. How will you know that that is what they're supposed to give you?
If my product has been sold, all of my products for the day has been sold.
You are almost there. So what we need to do for you to know how much stock was sold, for you to know that you're being given the right amount of money, you need to know how much stock was actually sold. Isn't it?
Yes.
How much stock was actually, what is the value of stock that was sold to customers? And in order to do that, to calculate that, there's something you need to know. And remember, with these conversations, I am assuming that you are a good owner manager. You keep your records. When you sell, you are writing down. You count your stock. You are very diligent. You are prudent with the management of your business. So there is something that you need to know. You need to know before you leave for the training. You need to be knowing the opening stock. What is the opening stock that you have? Before you leave. So when you come back, for you to know how much is the cost of goods sold, you need to come back and say, okay, when we started business today, yesterday when we closed, the value of stock that was available was so much. And the same closing stock is going to be the opening stock this morning. So you need to know that, for example, okay, our opening stock for the day was 20,000 rands. There are different ways of knowing this. If you've got a teller machine, point of sale system, most of them, they are able to show you, they're able to show you how much stock you have, how much stock has been sold and how much stock is left. But remember, with the point of sale, it's garbage in, garbage out. If the information that is being, the information that somebody is, the information input into the machine is wrong, even the information that you'll get out will be wrong. The report that you'll get will be wrong. So it is not just technology needs people, because technology depends on the information that you give it. But a person, we as human beings, warm bodies, can verify the veracity, the credibility of the information that is there. So there must also be some physical stock count. It must be supplemented with that. It's not a matter of just relying on technology and abdicating your responsibility as the owner manager. So you need to know what was the stock that we started with. Are we together?
Yes.
Again, you must know, you must add plus purchases, meaning if there is any stock that you bought or that was produced, because some make their stock. You don't buy. If you are baking, you make your own stock. You don't buy it. You buy only the ingredients. So you must know how much stock was purchased. If you were expecting any deliveries, you know that I've purchased stock to the value of 50,000 rands. Now, in order to know for sure the value of stock that was sold, less closing stock, you need to know you left 20,000 when you left, the value of stock, and now you knew that the suppliers were going to deliver stock to the value of 50,000 rands. Now, when you come back, you must determine the value of stock that is left. Closing stock, in other words, today, when we close business, what was the value of stock? Suppose you discover that the value of stock, closing stock, is 35,000. So, to calculate the cost of goods sold, you will then say 70,000. It's 20,000, eh? 20,000
Plus 50,000.
plus 50, which is 70, minus 35,000. How much is it?
20.
35,000.
35, yeah.
Yeah, 70 minus 35 will be 35,000. This is the cost of goods. Cost of goods sold. It's 35,000. This is very important. It's an amount that is very important because in a business, stock is coming in,
Stock is going out.
stock is going out. And stock that has not been sold remains in the business. It may be there is stock on your shelves, there is stock in the storeroom. So this is how much the value of stock that was sold. So the person that you left selling, if they sold stock to the value of 35,000, how much must they give you? They are not selling stock at cost, no? Then it means, let's say your markup, you'll add your markup. If your markup is 100%, then I'm supposed to give you 70,000 when you reconcile, when you do the reconciliation with the person that you left. The hard cash that should be in the business, whether maybe through a bank deposit and hard cash, must add up to 70,000. So this is how you determine the cost of goods sold. And this amount, calculation of this amount is important because on a month, let's say you are a very good business owner manager and you do calculate, you do determine your profit on a monthly basis. For example, to calculate our profit, we need, what is it? What is the statement that helps us to calculate our profit? Do you remember it? You don't remember it? The statement. Because if you are in business, you are there to make what? A profit. So if you cannot calculate a profit, you are in trouble because you will not know whether you are making a profit or not. So say, for example, for the whole month, you sold your sales. When you check your books, remember, you do your records, or you've got the point of sale which is showing you that on such and such, on a particular date you sold so much, and for the past 30 days or 22 days that you've been in operation, you have sold 150,000. Again, if you don't have a point of sale, you must have a manual system where you record on a daily basis, because unless you've got a management information system, you are not going to be able to determine your profit if you don't record. In other words, if you are not recording, you will not know whether you're making a loss or a profit. So you find that, say this is January. month of January 2024, you want to determine your profit. I want to show you the value of knowing how to calculate the cost of goods sold, especially when it comes to preparing the income statement. And then suppose here, that opening stock, remember, you will not just come and say cost of sales. It's very difficult. Cost of goods sold. It must be worked out because there is stock, not all stock is sold. Unless if you are able to sell everything, it's easy. You'll just know that I sold so much stock. But the problem is that there is stock that you are ordering, there's stock that you are selling, and there is stock that remains. So for you to know how much stock you sold, it's important. You need to find a way of actually how much, because maybe you've got a very big, quite a big storeroom, and you've got stock that is remaining, and there is stock that you have sold. So you need to be able to reconcile. So it means that you need to know your opening stock. For example, let's say your opening stock, and remember, this is just an example. How much did we say?
20,000.
20,000. And I'm just making an example. It's just
Okay.
Yeah, I want to make it in such. Remember, this is just an example. I just want to make it plus purchases. Let's say, for argument's sake, you purchased stock. Let me make it 105,000, and then less closing stock, no? Less closing stock. Suppose the closing stock here was, I want to be left with 70. I'm designing that because just to drive a certain point to. Here I've got 125,000. So 125,000 minus 70. Let's say the closing stock is 55, nah? How much will I be left with? Okay, let me do this. I want to do something very simple here. Let's say I've got how much? 125,000 minus. I think, let's say 55,000. 55,000. This is stock that is remaining, and then the cost of goods sold is 70,000. Suppose there is 70,000 worth of stock that has been sold. So you need to be able to do this calculation, because your cost of goods sold is not, it's an amount that is accounting for the actual stock that was sold. Some will call it cost of sales, and then cost of goods sold, let's say 70,000. You have calculated it by saying opening stock plus purchases, and plus purchases less closing stock. It gives you cost of goods sold. So you've got 70,000 there, and you've got your gross profit. Gross profit of how much? 150 minus 70, how much is it?
70.
80.
25.
80.
80.
Yeah. 80. You can calculate it. 80,000. And then to get our profit, we must now say expenses. We must subtract our monthly expenses now. And ideally, I needed to list them all, your rental, your whatever, but for the sake of time, let's say the expenses came in at 35,000. But let me make it a little bit realistic. Suppose your expenses came in at 50,000. I'll write it here for the sake of visibility. 50,000. And then your net profit before tax. Profit before we account for tax. How much? 50,000. And then if you want to add tax, to account for tax, let's say tax is 25%. I'm just giving you an example. I think the current income rate of income to company tax is about 28%, 29%. If it's 25, it's 20. Say the rate of income tax is 28%. 28% is still okay. And then 50 by 28%. It will be, the tax will be 14,000. 14,000. Anyway, this topic is not about tax. And then 50 minus 14, your net profit
36.
after tax will
36.
be 36,000. Net profit after tax will come in at 36,000. Yeah.
Write it down. 36,000.
Let me see, where can I write it? I've run out of space. Anyway, this is not subject of our discussion. 36,000, your net profit after tax is not supposed to be in brackets because in financial terminology it's got an implication. It's a minus. But otherwise, that's how it goes. That's how you calculate the cost of goods sold. It's important for an owner manager because it's not all the time that you are at the shop. You leave somebody to be running the business. You need to be able. Actually, I used to tell owner managers that when you go to the shop, it is not the person that you left, the teller who must tell you how much they must give you. You are the one who must tell them how much they must give you. Because you can be excited, they'll give you a big amount, what appears to be a big amount, but in fact they've pocketed almost half of that amount. And if you are working in the dark, if you do not know how to determine a cost of goods sold, then you'll be in trouble. You'll lose money. So thank you very much. That was our discussion for today. How to calculate the cost of goods sold. I hope you enjoyed the topic. This is the Enterprising Conversation channel, your small business watchtower. I'm your channel host, Rendani. Till we meet again. Cheers.